Good morning from London. I'm Anna Edwards alongside Guy Johnson and Valerie Tytel. We're an hour away from the opening trade. Here's what you need to know. Bets on Fed interest rate cuts hang in the balance as bond traders wait with anticipation for today's US CPI print, a day after factory gate prices unexpectedly drop. Meanwhile, the ECB meets, but is expected to be in no rush to lower rates again. With inflation at target and better than expected economic data, we're live in Frankfurt. Plus, global tech is on a high, with Oracle's bullish outlook driving shares to their best gains since the early 90s, while Klarna's stock price pops at IPO and Alibaba raises money.
We start the hour with markets, frankly, going nowhere before the big CPI release out from the U.S. later today. S&P futures unchanged. Euro Stoxx 50 futures essentially unchanged. Euro dollar nearly unchanged at 116.90. And those 10-year yields out of the U.S. at 4.05 at the lows of the month as we head into the CPI report that could tell us how aggressive those Fed cuts are to come. The countdown to the opening trade starts right now.
Thursday the 11th, good morning. The noise is high. The volume is up. Is it at 9? Is it at 10? I don't know. But there's a lot of noise out there at the moment. Trying to cut through it, I think, is really difficult. There's a lot going on within financial markets. There's a lot going on outside of financial markets. But two things really stand out right now. The data are telling the market that the Fed can cut. And as long as that kind of stays as is, we're good. That seems to be the narrative certainly coming through in terms of asset prices right now. And the other one is anything that keeps the AI train on the track and hurtling forward is good and keeps financial markets on track. Anything that knocks those two stories, I think, will obviously be met with significant volatility. But we're not there yet. Does CPI deliver it today?
Yeah, that's right. The data drops at 1:30 p.m. London time later this afternoon. It just feels like one of those days that is going to be pivotal for what's to come forward, both when it comes to markets and when it comes to just how dovish this Fed shift that we're going to get next week could be. Remember, the Fed is looking very likely to restart this cutting cycle that's been on pause for 9 months. But the question is just how aggressive will they go? Will it be a 25 or will today's CPI print open the door to a 50 basis point rate cut? We are expected to see inflation remain sticky. That is what is priced in, at least when it comes to economists' expectations. Core inflation to stay at 3.1% and quite a juicy month-on-month reading for core CPI as well at 0.3%. Both those things taking us a bit farther away from the Fed's 2% target that they have been missing now for 53 consecutive months.
And is it going to be the front end of the bond market that we're really watching for response here? Because as you were talking about bond yields coming lower, Valerie, and certainly at the front end we've seen a lot of that. We've seen a lot of pricing in of Fed rate cuts. And if anything in the data suggests that the cuts will not be as big as the market has anticipated, is that the asset that we're really going to be watching?
I read something this morning that had the 75 in it. Just going to point that out now.
Well, in September?
Yeah.
Right, yes. And even if we don't get that, the market is pricing 75 by the end of the year.
So what did we make of the PPI data yesterday? Because you can read it two ways. You can read it as good news, Fed can cut, inflation's not a problem, or you can read it as bad news, corporate profitability margins definitely being hit here, and that's where the pain point is coming. Effectively, this is a tax rise, and it is feeding through into the system. Well, you can read it one of two ways.
I think it threw cold water onto the assumption that the hot PPI print of last month is going to eventually make its way into CPI. I think that's what it dented yesterday, and I still think it opens the door up for possibly a weak print today. But the PCE components of PPI, not to get too much in the weeds, we're basically flat. They were as expected. So when it comes to the PCE print later in the year or later in the month, it's really more about what we get from CPI today.
Is it still too early to get the full picture? You know, there was so much buying ahead of time when we feared the worst when it came to the tariffs, that we saw a lot of inventory build as a result of that. And you just wonder whether we are really getting a full picture of who's going to bear the pain of this.
Look at lumber prices, okay? Don't often do that, but I'm looking at them right now. Look at lumber prices, look at oil prices, look at these kinds of stories. What they're telling you is that there is actually deflation in certain areas of the market, and it feels like that is offsetting some of the inflation that is coming through as a result of tariffs at the moment. Do we end up one way or the other, or do we end up reasonably balanced? I think is an open question. I think sorry.
Well, I just want to mention that if we do see some sort of turnaround in services CPI, this could play into the hands of the hawks at the Federal Reserve, who could argue that financial conditions are just too loose in order to start an aggressive aggressive cutting cycle. Excuse me.
I think I've been given the most boring topic of the day.
I think that's possibly true. Yes.
Make it jazzy for us.
Good luck.
Okay, here we go. ECB. It's going to be exciting.
Shall we move on?
Lizzie's there. There we go. Nothing to see here. Moving on.
No.
Lizzie Bird would be really cross with us right now.
She will, but there are exciting things to watch for. I mean, France will be in the background. When there's nothing else to talk about, what Christine Lagarde will want is plenty of other things to talk about, so she doesn't get asked about France about 50 times. Because that's the danger for her, is she's asked about that. And what she really doesn't want to say is, we are not here to close the spreads, which is what was said back in 2020 and went down as a bit of a communications incident on the part of the ECB.
Yeah, I thought it was really interesting just to look how flat the front-end pricing is for the ECB. We're pricing basically nothing for the next 12 months. Economists are split on whether the next move will be a hike or a cut, but that's not expected to come well into next year.
There's nothing to see here.
Do we have none of our own ideas, those in the financial markets? Because maybe this is because our next guest is going to tell us that the ECB has been talking about being deliberately uninformative. And if that's their stance, we have nothing to say. We can't think of anything.
The only thing I will add into the ECB debate is I think there could be a chat. If the Fed goes hard and cuts, does the dollar go down? And if the dollar goes down, does that push the euro higher? One would assume so. And that could provide some disinflationary impulse into the Eurozone. But that's not an ECB story, that's a Fed story. Yes, the ECB is still boring, but the Fed is interesting.
There we go. And France is interesting.
Let's talk about tech, because I've got lots to say about that.
This is interesting. So, incredible performance by Oracle yesterday. I sat here yesterday saying we could see the share price pop the most since 1999. In fact, it was the most since 1992. The stock was up by 36% yesterday. S&P then hits another record. We know that story. We've seen it a few times. But what is interesting, and we talked a little bit about this in the show yesterday, but will be an ongoing conversation. If Oracle is winning, I know that there are people who think that maybe it isn't winning as much as the market thought yesterday, but if it is winning, who's it winning against? And I was digging back through some old notes coming through from Lion Trust, talking about how it is winning market share, possibly from some of the other cloud leaders like Amazon, Microsoft and Alphabet. And actually, Bloomberg Intelligence suggesting that perhaps the cloud business over at Oracle is now bigger than Alphabet's cloud business, in fact, many times bigger. And those stocks were actually pretty flat yesterday. So in a day that was so aggressively pro-tech in the shape of Oracle...
SAP didn't have that good a session either.
SAP didn't, exactly. So you wonder, is Oracle winning at others' expenses, or are we growing the pie? And I don't have the answer to that.
Well, I think a lot of that comes down to, do we believe these investment numbers? OpenAI signing a $300 billion deal with Oracle, as reported by the Wall Street Journal. All these flashy numbers, it makes me think about what all these tech moguls were promising to Donald Trump about their investment. These are huge, huge numbers. And the question is really, when are they going to, when does that investment actually come?
Valery's been researching Hoover Dams this morning.
Excellent.
So, yes, the 4.5 megawatts, I need to research that. But the deal signed between OpenAI and Oracle is equivalent to 2 Hoover Dams.
In terms of the power required.
In terms of the power required.
And the amount of concrete and kind of all the other stuff that's going to have to go into this is absolutely enormous.
Now this is getting real.
But so it does get real. This is the connection with the real economy is, can the real economy actually deliver?
Is it even possible?
Precisely. Is it even possible? And these large language model stories, OpenAI, are burning cash like there's nobody's business tomorrow. They are going through cash so fast. And I read a report, I sent around, there is talk of extinction events for some of these companies. They can't deliver. You cannot continue to burn cash at these kinds of levels. There is going to be a Darwinian process that unfolds within this. But Oracle's numbers are based on all of them surviving and all of them delivering and all of them spending all of this money. Yeah,
Parmi Olson, I think, Bloomberg Opinion, writing about that and writing about the fact that all of these tech businesses are focused so much on large language models, maybe to the expense of other robotics, more sensory types of tech that maybe should be getting more attention. So maybe that's another thing, another thing we need to factor in.
At least on a macro standpoint, is this telling us that financial conditions are too loose, or is the AI trade operating completely differently?
It's structural. Are these two different? It's not in the cycle.
Are these two different worlds? But at some point they have to connect, and the amount of money that is being thrown around is drawing parallels with earlier eras. And are we in that kind of acceleration phase? I'm reading a lot about that kind of. Are we getting towards the crazy phase? Oracle, it's a massive company. It moved by 30% yesterday.
Yeah,
we're in bonkers territory.
But the promise of the productivity boom that AI is leading us
because
to,
let's face
it's a promise.
And let's face it, with an aging population, I don't know if we have many more answers, do we? There are not many other solutions. So there we are, all eggs in that basket.
Yeah, and Ellison was talking about this yesterday. Apparently, we're walking towards automated greenhouses. That came up apparently. Silvia Dania, Barclays chief European economist, is going to be joining us. She will have exciting things, I promise you, to say about what is happening over at the ECB. Antoine Flammarion, Tikehau Capital co-founder, joining us. Lots to talk about in France, lots to talk about in private equity. Beata Manthi, Citi's European equity strategist head, joining us as well. Ian Steely, JP Morgan Asset Management International CIO for fixed income. He's having a busy time at the moment, isn't he? There's a lot going on out there. The noise is up.
And there's a lot going on when it comes in terms of data. No one is taking a long lunch today. There is a lot happening in between 1 and 2 p.m. At 1:15, it starts with the ECB rate decision. Then at 1:30, we get the U.S. data, which includes U.S. CPI and U.S. initial jobless claims. At 1:45, we hear from Madame Lagarde herself at the press conference. And then later today at 6 p.m., we do have the 30-year bond auction. The 10-year auction yesterday was very well received, and you have to start thinking about whether traders will be using this bond auction as a liquidity event to maybe take off those steepeners that seem to have gone quickly out of favor.
It's amazing, isn't it, how fast that trade has moved off. But if the Fed gets it wrong, do they kind of re-accelerate the other way? And that's going to be interesting to watch as well. Let's talk you through what else we are watching this Thursday morning. The US conservative political activist Charlie Kirk has been shot and killed at an event at Utah Valley University. The FBI is still searching for the shooter after releasing a person of interest from custody. Kirk was a close ally of President Trump, who posted about the incident on social media and ordered American flags to be lowered to half-staff until Sunday. The UK ambassador to Washington, Peter Mandelson, has been answering questions about his friendship with the late sex offender Jeffrey Epstein. This after the publication this week of a 2003 birthday book in which Mandelson called Epstein his, quote, best pal. Bloomberg News has obtained more than 100 previously unreported emails between the two men, casting new light on their relationship and showing that it was deeper than previously known. Mandelson has yet to respond to questions sent by Bloomberg. And Mexico plans to impose tariffs of as much as 50% on cars and other products made by China and several Asian exporters. The Mexican economy minister says the levies are meant to protect local industry, as his country has become the top destination for Chinese cars. The move aligns Mexico more closely to US trade policies, with President Claudia Sheinbaum preparing for talks over North America's free trade deal. Is this about the free trade deal, or is this about the number of BYDs that are currently on Mexican roads right now?
They say it's about protecting jobs. Yeah, that's what they're trying to do in Mexico.
I think it's getting people starting to think that perhaps this fortress North America that Trump really wants, creating a common boundary in North America against cheap Chinese exports, one of those being cars, could be something that could be maybe perhaps setting the table for these negotiations to continue.
It feels like this is setting the table for that. We're going to put, and the pressure is on Europe to do similar things as well in so many different areas at the moment. This is US trade policy, US foreign policy interacting at a really interesting level. And Europe thus far has kind of played ball, but...
Yeah, we will be watching those North American conversations really closely. That NAFTA renegotiation, became something else, was a real feature of the first Trump administration, wasn't it? So we continue to watch that. Meanwhile, President Trump still faces, on the tariff front, difficulties with his Liberation Day tariffs, trying to get those through the legal system. And you were pointing us towards some analysis that suggested, if a court rules on this, if the Supreme Court rules on this, maybe it shuts it down, or maybe it opens up executive orders to a whole new world.
Read the Gregget piece this morning. I think it is fascinating in terms of what will happen to US tax policy and the ability of the administration to basically dictate it on a day-by-day basis. It will also potentially undermine what is expected to be a fiscal expansion next year. Would tariffs outweigh the big, beautiful bill, fiscal expansion that we're expecting to be seeing, and actually you end up with contractionary fiscal policy in the United States? The Constitution apparently doesn't differentiate between tariffs and taxes. They are one and the same thing, and maybe that's the way we need to start thinking about it.
Well, and we know the Supreme Court is fast-tracking this court case against Trump tariffs on quite an aggressive schedule. This hearing starts in early November, so possibly we get a reading on this before the end of the year, which either opens or closes the door to more executive powers.
Yeah, absolutely. One to watch there. Coming up on the programme, we will get back to some corporate news flow for you. The Spanish alternative energy company Iberdrola buys a 30% stake in Brazil's Neo Energia. We'll check on the Spanish company's stock at the start of trade this morning. Plus, we'll also follow European tech to see if shares get a boost from Oracle and Klarna's jumps in US trading yesterday. Maybe we dealt with that yesterday, but still it was a fascinating day to watch. Up next, we're live in Frankfurt to preview Christine Lagarde and the ECB decision today. How many questions will she be asked about France? If you have any questions for our guests, please join the conversation. IB plus BBTV Go. That is the way to do so. This is Bloomberg.
I still see very strong pipelines. I see high level of engagement from clients. I see a sense of urgency as well, given the speed with which industry structures are changing, and there is still growth opportunity. I think growth will be a notch lower. We're keeping an eye on the labour market. It's a low churn market. So not everything is rosy, but we don't see a recession on the horizon.
The Citigroup CEO Jane Fraser talking there about the US economy then, talking about not seeing a recession on the horizon, which is of interest. Let's go to a different geography, over to China, where we have a red headline on the Bloomberg terminal telling us that China is considering helping local governments with $1 trillion of bills. And this is all about trying to free up debt within the economy and trying to pay off some of the over-indebted parts of the economy. So China is preparing to tackle the significant backlog of unpaid bills owed by local governments to the private sector, and that's probably the key link. So if private sector is waiting for these debts to be repaid by local governments, then that sort of ties things up from an economic growth perspective. And so as a result, the government is considering asking state lenders to act on this. There you go. There's China, Val.
Well, back to Europe, the ECB is expected to hold rates this lunchtime, with policymakers looking for signs of any impact from U.S. tariffs in the months ahead. Bloomberg's Lizzie Burden is at the ECB in Frankfurt. Good morning, Lizzie. Talk us through the factors the ECB is taking into consideration in their decision today.
Hey, Val. Well, as you say, it's going to be an uncontentious hold today because the Governing Council really is waiting for clarity on the economic impact of Donald Trump's trade war. And all the recent economic data has quietened the concerns of the Governing Council. You've got inflation at 2.1%, an upside surprise for Q2 GDP, unemployment at a historic low. And as Christine Lagarde has put it, the euro area economy is in a good place. So you've got markets pricing less than a 1 in 3 chance of another cut by the end of the year. Most economists we surveyed not seeing any more moves this year. And I'm sure that Christine Lagarde is going to be pretty tight-lipped on whether the next move is a hike or a cut. But what could be interesting, and Guy's been pulling my leg about this being a non-event, what could be interesting is the updated forecasts, because since the last set we've had the US-EU trade deal, and 15% tariffs is bang in the middle of the base forecast and the severe scenario that the ECB set out. So it may be that, yes, you have alleviated uncertainty, but still a weight on demand in the euro area. So they may upgrade their forecasts in the near term, but downgrade them in the longer term. And another element that could be interesting would be in the press conference, because, of course, President Christine Lagarde was once upon a time the French finance minister. I'm sure she'll be asked about whether the ECB would intervene if the oats-bunch spread were to widen. And I'm sure that her answer would be it's not for her to intervene in the fiscal politics of any member state, though it is for them to be fiscally responsible. But of course, that conversation all ties into what's happening with the euro, this climb towards $1.20, the euro having shrugged off a lot of the French politics. But you are seeing this divergence opening up between the Fed and the ECB potentially. We know that they could go for 50 basis points next week. That comes onto the deflationary side of the ledger. And just finally, tied to that, it may be that while I'm stood here in Frankfurt, that US CPI print that drops right between the decision and the press conference is what moves the euro even more.
Absolutely. So look at America, not Frankfurt, for what could be the market-moving event of the day. Lizzie, Val tells me I can't take a long lunch because of the ECB. I'm still thinking about the long lunch. Lizzie Burden at the ECB in Frankfurt. Silvia Ardagna, head of Europe Economic Research at Barclays, joining us now. Long lunch? Do I have to watch this? What's going to happen today?
Always interesting to watch, even when you think it's an uninteresting meeting.
Maybe I'll have lunch while watching it.
I think so. Well, we agree with Lizzie that the forecast is going to be one of the important points. And the second point, obviously, is always the communication. On the forecast, we expect them to upgrade a bit the near-term growth, but to downgrade maybe Q4 relative to their own forecast on the basis of weak economic data that might basically compensate for the strong first half. And then on inflation, it's interesting because we expect headline inflation to be revised up in the near term, but we still think that they will show an undershooting and also an undershooting of core inflation by 10 basis points 27. So for us, the ECB has not done, but we don't expect much in terms of communication.
No, you say that they're going to be deliberately uninformative. That sounds as if we might have even less of a clue where they're going on the other side of this meeting.
That's our baseline, right? This is what the ECB wrote in their accounts. Again, if that was the intention in the July meeting was very informative for the market perspective. So it is still not clear what the ECB means for being deliberately uninformative. Is it to leave the market pricing nothing? Is it the market to leave the market where it's pricing, on the day of the meeting, or 50-50? So in that case, we think from the forecast and the risk assessment is where the signal could come, right? The downside risk to growth is where we think the ECB might keep putting an emphasis on.
And Sylvia, when it comes to questions about France, how do you think Lagarde will answer these kind of questions about the perhaps fixed income risk coming out of the OAT market?
I think the standard answer that the president has recently given is that these countries need to stick with the recommendation of the European Commission, which means that the country needs to pursue a fiscal consolidation. The reality is that we expect France to do exactly the opposite, right? There will be a trade-off between political stability and fiscal consolidation. So we think that the government can stay in place, but watering down what was the proposal of the former PM.
If there was a need to close spreads, and we're not there yet, would it come with conditionality? And do you think Paris would be prepared to accept any kind of conditionality?
Look, the TPI clearly, I think, would not be the instrument fit for the task because it would be difficult to say that any spread widening would be due to speculation if there is a government that is not going to pursue even a minimal fiscal consolidation. Still, the TPI could be used, I think, to avoid contagion to other peripheral countries. So there is the OMT. The OMT will have to come with some form of conditionality, which then would require, as you say, first a change maybe in the government landscape. So perhaps it will be, definitely new legislative elections, and then from there we would see what happens.
Sylvia, do you think the bond markets are giving a green light to Paris to do as you describe, to preserve the government but water down the fiscal proposals?
I think this is what the base case of the market is. I think the market is would be much more unsettled if there were new legislative elections because the outcome would be more uncertain. But I don't think people in market really expect a sizable fiscal consolidation from France.
Okay. Sylvia, thank you very much. Silvia Ardagna, head of European Economics Research at Barclays. Lots to think about then when it comes to the ECB meeting, not least the fact that the CPI print drops. I hadn't quite registered the fact that the timing is quite so close.
This is why you can't actually go for lunch, which is annoying. But you have to pay attention
yes, and
to
I'll
the
try
CPI.
not to be on a bus for 2 hours again today, which is what happened to me a couple of days ago. That would, limit...
Bus, you can be on the bus, that's fine.
I can, but you don't have quite as many screens as you do around your desk. That's the truth. Right, coming up on the programme, we'll stick with the subject of France, in fact. We'll be speaking to Antoine Flammarion, who's the co-founder of Tikeo Capital, about France's new Prime Minister, about the French political landscape, what that means for investment and private equity. Can he overcome the political impasse and rein in the country's debt? That's the Prime Minister, that is. That conversation next. This is Big Bag.
30 minutes to the start of the opening trade here. We've got futures doing this. Let me show you some numbers. You can have your breakfast, but maybe you don't get lunch. This is the picture at the moment. Fairly quiet at the moment. An opportunity presents itself, therefore, for a long breakfast, if not a long lunch a little bit later on. Things are going to get exciting later. CPI is about to happen. The ECB, Christine Lagarde, is going to be asked lots of questions about what's happening in France.
Yeah, plenty of fixed income catalysts ahead today. We are opening up the European bond markets, though. Very steady across the curve when it comes to Germany and France, but just look at how close those French 10-year yields are to Italian 10-year yields. We've yet to have a session where those French 10-year yields close above the Italian 10-year yields, but man, it is just a signal of the times of how big this shift has been.
Yeah, certainly very close to each other, aren't they? Right, let's stick with the French theme. Sébastien Lecornu has taken over as the French Prime Minister, pledging big changes as he tries to engage opposition parties in reining in the country's debt. Lecornu is the country's fifth Prime Minister in just 2 years. The last two premiers were ousted after trying to pass budgets that would sharply reduce France's deficit. That's the widest in the euro area. Joining us now for an exclusive interview, the co-founder of Tikeo Capital, Antoine Flammarion. Thank you very much, Antoine, for joining us this morning. So do you have any ideas for this new Prime Minister as to how he can try and break this impasse over the budget? Any suggestions from business, from the world of finance, as to how this can be done?
Good morning, Anna. Good morning, Guy. I think, we have a new Prime Minister, as you mentioned. We have no majority at the National Assembly, so part of the challenge is that. I think when you listen to what he said yesterday, and it's been very quick, it's been 8 minutes between the two Prime Ministers, I think we should expect some changes, and maybe some major changes, so you have to reconciliate everybody. This new Prime Minister has a very long experience, including being mayor of a small town up to Prime Minister. So, hopefully will help unlock the situation. It's not going to be easy, but as an entrepreneur, we are always optimistic.
Right, yes, maybe that helps, Antoine, in the current situation. I mean, is the business community, our entrepreneurs, are they expecting further fiscal slippage, or do we just carry on like this for the sort of medium term?
So, as you all know, France has been very heavy when it comes to taxes, and there is a very strong culture of heavy taxes. Obviously, it's a big problem for the competitivity of the business, of the job. So we need to find right, ways to make sure the fiscal pressure is not, increasing. And France is part of Europe. You are all familiar to what happened with Italy, for instance, when it comes to taxes. So we need to make sure we remain competitive. The good news is that the business community in France is very strong, from small, medium company to very large companies, which are all global. And you have to fight with global companies, and as a consequence, you need to make sure taxes are the right one. But there is no doubt that there is some very strong pressure from the left wing on the taxes. And the challenge of this new Prime Minister is to make sure he can get some majority, especially to have a budget. Also, we have specific tools to make sure we can have a budget in a specific format. Yep. But taxes is a clear point of attention, no doubt.
Antoine, let's say he succeeds. Let's say he is able to do what his predecessors have not been able to do. What happens to the French economy if we do get a budget? What does it look like once this thing passes, if this thing passes?
Yeah, I think, first of all, European economies, and especially the large one being, Germany, France, remain, very solid overall. It's very rare that you have, the GDP being down three points. I mean, it happens for COVID, but first of all, French economy is very stable. On the other hand, you don't get, 5% growth as well. So we can say that, it remained very stable. If he's becoming successful, and everybody should wish that, French people, but not only French people, then there is probably, a new area, and because it comes to confidence, and when people are confident, the consumption is better. Companies are spending more money. Yep. Foreign people are investing more money. Sorry.
Would you invest more money if the budget passes? would private equity, would business invest more into the French economy? And by how much? How significant an event is this that we get the French budget passed?
I think if you have a good scenario, which it's still highly feasible, it's going to be complex, then I suspect you get more money coming here. And you saw what happened in Italy. Suddenly, everybody is going to Italy, and we had that in France. And I give you a recent example with and without budget. You probably saw the 2 billion invested in Mistral, one of our largest AI company in France. The money is coming from Abu Dhabi, the Netherlands, and so on. So I think President Macron has been good at attracting foreign money into France. We have some very strong companies. So to go back to your question, Guy, if we have a good scenario, I suspect there will be some acceleration. On the other end, obviously, if it takes 4 months and it's becoming a mess again, then people will wait, because when you invest, one of your major risks is all the legal risk, and you need a stabilized system rather than the other way around. So if you have a lot of noise, it creates uncertainty, and people decide to invest in Spain or in Italy or in Germany, no doubt. Yeah.
Antoine, perhaps before we get to passing a budget, we have to have the new premier picking ministers. Are there any available seats that you think will be maybe a signal to the business community on how he intends to conduct policy moving forward?
Yeah, I think that's part of the trick, because the business community will be closely watching the Minister of Budget, the Minister of Economy, because depending on where they come from, which political party, the signal will be super strong, obviously. And I think part of the challenge of this government is, who's going to be at the budget and who's going to be running the Ministry of Finance. The current Minister of Finance historically came from the left part, has been a very good banker and insurer as well. Everybody's going to be watching that, because that will give a clear signal of the direction. But then you have the National Assembly, so it's not only the minister, and part of the previous challenge is that it's not only the casting of the Prime Minister and the Minister. It ties back to the National Assembly, where we have no majority, and that's create the real challenge. But you are fairly right. It's going to be highly scrutinized, and I think it's very important for the market. And they've been really calm so far, but for the market and the business community, we need to make sure we have some very strong signal.
Antoine, the other tail risk that the market was worried about is the possibility of having a snap election. In your mind, is that something that's been totally erased, or is that something you're still contending that could be a possibility for France in the coming months?
When you look at the markets, both equities and fixed income, in the last, let's say, 3 months, as you noticed, the movement have been very limited, despite the challenging political situation. So my sense is that the market are less focusing on that, and is it a new era? Probably. You saw the volatility elsewhere. If you think about it, the increase of the market cap of Oracle yesterday is as big as the revenues of the French state in a year. 300 billion yesterday increase in market cap, which is, the revenues of the French states is 300 billion. So I think the markets are focusing on other things, right or wrong, but I think it's a new era, and we'll see, you mentioned ECB this afternoon, but it seems to me that the reaction are more micro rather than macro.
Antoine, we're going to leave it there. Thank you very much indeed for your thoughts on what is happening, and we're going to continue to watch events very, very carefully. Antoine Flammarion, co-founder of TKO Capital, thank you very much indeed. Let's turn to the geopolitics and what is happening in that theatre right now? Bloomberg has learned that Poland has asked allies for additional air defence systems and counter-drone technology to better protect it from Russian incursions. The request came after the NATO member shot down drones that crossed into its territory earlier this week. For more, we're joined now by Bloomberg's Oliver Crook. What are we learning about how NATO is responding?
Yeah, so in the last 24 hours, there are a number of things that we've learned. We've learned that there were apparently 19 different incursions into Polish airspace. A number of those drones were down by sort of joint NATO operations that involved Polish F-16s, Dutch F-35s, some German Patriots, some also intelligence crafts from the Italians. So taking this obviously very, very seriously, and seriously to the point that the Poles invoked Article 4 of the NATO treaty, which is consultations among NATO members in order to figure out how to react to something. Now, this is only sort of a discussion stage, but this is something that's only been invoked ever 7 times since 1949. So really the Poles wanting to draw the urgency of the matter. And we just had Donald Tusk, the Prime Minister of Poland, speaking just moments ago. He just finished up standing in front of what appeared to be several F-16 fighter jets to really send that very strong signal that they are taking this exceedingly seriously and that they are calling to get more air defense sent to Poland. And apparently a number of different nations are facilitating that over the next couple of hours. As far as the Russians are concerned, we had some very sort of mixed signals and messages from initially the Russian military. They were sort of retracted. Then we heard from the Kremlin spokesperson, Dmitry Peskov, who actually refused to comment on the drone incident. So we're watching this all very closely. You know, we understand that at least a number of these drones were so-called dummy drones, these really inexpensive plywood, styrofoam drones that are used to basically overwhelm radar and defense systems. But again, we're waiting to see as much information as we can get as the sort of couple of next days unfurl.
Yes, Oliver, so some of these drones might have been dummy drones. Some of them did quite a lot of damage. We're just looking at some live pictures coming to us from the crash, or one of the crash sites in Poland, after their armed forces, of course, with NATO support, shot down these drones that crossed into their airspace just yesterday. So this damage that we're seeing here as a result of those drones and those being shot down. Interesting that the NATO alliance then, Ollie, is assuming that several of the drones were actually destined to hit a logistics hub in southeastern Poland, which I suppose might make sense if that was part of a supply chain into Ukraine.
Yeah, I mean, listen, I think that with all of this sort of stuff, we have to take it with a great deal of caution. I know there was some reports out in the German press that were citing specifically NATO officials saying that these were sort of drones that were targeting that logistics hub in Poland. We need to kind of think about how serious an escalation that would be for the Russians to do something like that if it was deliberate and to try to deploy actual military tech to blow something like that up. That would be obviously a massive step forward. That would be, you know, the kind of thing that would at least foster very serious discussions about triggering Article 5 of NATO. And I imagine if you were to see something like that, it would be something much more coordinated and something much more full-throated than what we saw over the last couple of days. Again, the Russians have not officially said really anything about this, whether or not it's an accident, though most of the people that are watching this from Poland and the EU to say you really have 19 air violations, for that to be entirely accidental is pretty far-fetched.
All right, thanks to Bloomberg's Oliver Crook out of Berlin. Staying with geopolitics and moving to the Middle East, Israeli Prime Minister Benjamin Netanyahu has signaled that further strikes on Hamas targets may be imminent, warning that any nation harboring what he described as terrorists would face consequences. Qatar strongly condemned Netanyahu's remarks regarding its hosting of a Hamas office. The attack has also prompted a strong response from Saudi Arabia's Crown Prince.
We reject and condemn the assaults by the Israeli occupation authority in the region, the latest of which is the brutal aggression against the sister state of Qatar. This attack demands an Arab, Islamic, and international response.
Let's bring in Jumana Bersetchi, our anchor in Dubai. Jumana, there's now a wider discussion in the Middle East about American security guarantees. What can you tell us?
Yeah, well, it's notable that in the last couple of days, there's been a strong show of support for Qatar. And indeed, the president of the UAE, Sheikh Mohammed bin Zayed, flew to Qatar yesterday. He met with the emir, he met with the prime minister in a show of support. It is expected that the Saudi Crown Prince Mohammed bin Salman will do the same. Notable in his comments as well that he actually specifically says that there needs to be an Arab and a global response to the attack on Doha. a couple of days ago. And I think what is happening now in the region is a reevaluation not just of the Gulf's potential relationship or future relationships or even those potential normalization talks that we had spoken about in the months up to this event between Saudi Arabia and Israel, but also the Gulf states' relationship with the United States as well. I point you to an article that's up on the terminal this morning by our colleague Sam Daher about many of these Gulf states having to reevaluate the U.S.'s position on those security guarantees. For so long, the implicit understanding was that these Gulf countries, specifically Qatar as well, would be home to the headquarters of naval forces, of the air base, of many servicemen that are present in the country at a heavy price in exchange for security guarantees. But that paradigm has been totally thrown up in the air the last couple of days, and not least with President Trump saying that he was not given enough advance notice to warn the Qataris in time that an attack from Israel was forthcoming. The war of words now between Qatar and Israel is turning increasingly more heated. Yesterday, the Israeli Prime Minister gave a video address in which he said that the Israel would not hesitate to continue to go after their enemies, Hamas officials, in any country that hosts them. And so the reaction from the region has been one of deep consternation and also concern about what happens next, and a reevaluation of those ties, those security guarantees with the United States, and perhaps, possibly, a shift east and forging deeper relations with the East, as opposed to being fully reliant on the U.S. for some of those security guarantees.
All right, thanks for the update. Jumana Bercecci, anchor of Horizons Middle East and Africa. Well, coming up, we'll keep an eye on the European equity open, watching out for a reaction in auto stocks today after Mexico plans to impose as much as 50% tariffs on Chinese cars. We'll talk about that sector and your other stocks to watch next. This is Bloomberg.
Welcome back. This is the opening trade. 10 minutes until we get trading here in Europe. Let's talk about these markets in 3 minutes. Our Bloomberg executive editor for Asia markets, Paul Dobson, is with us. Paul, good morning to you, live in London. Let us cast our minds forward to US CPI data. We've already established we can't take a lunch break here in Europe today because we have the ECB and US CPI. And US CPI, I mean, we were talking about the short end of the bond market, treasuries. That could be the asset to watch here. What are you watching for?
Yeah, so I think, you know, the idea that the Fed is going to cut interest rates this month is pretty much nailed on at this point. I don't think anybody is expecting anything different. But what we might get if we see a particularly high and surprisingly strong CPI number is the possibility that people take away some of the cuts that are priced in for next year. And so that would lift short-term yields at the 2-year tenor, for example. We've got a lot priced in at this point. We had that big rally in recent days, but we have seen inflation number and jobs data that has been justifying the idea that the Fed needs to get on with it. Maybe Trump's right. But I think it's interesting is to pay attention to what it means to the dollar as well. You know, is that a strong number going to be supportive if we get a lift in those yields, or, you know, are we going to see that depreciation trend start to continue?
Is Lizzie Bergen going to have an exciting day in Frankfurt today?
It seems unlikely, doesn't it? I mean,
you're in Frankfurt.
the ECB's not expected to do anything, sit on its hands. Maybe we'll see some changes in the forecast, but the inflation target is supposed to be kind of within reach, and the economic outlook. Well, there might be some weakness in there, according to Bloomberg Economics, but nothing too exciting there. And I think that, you know, again, so thinking about the euro, people have been watching for a long time. Can it bust out of this recent range, get up to sort of the 120 level, something like that? We're still around 118, I think, there or thereabouts. You have got the idea that the dollar will weaken if the Fed starts to cut interest rates, and with the ECB on hold as well. But people aren't really expressing it. You know, we've been stuck in that range. So poor old Lizzie, I think, can have a bit of a boring day.
Round this out, I guess, to other G10 central banks. The Bank of Japan meets next Friday as well. Any fireworks expected there? We had, you know, a headline yesterday that the Bank of Japan is said to see the chance of a hike despite the disruption in politics. Is that where you guys stand?
Yeah, so, well, the market is moving away from that a little bit. It seems that that if you look at the rates markets, people starting to move their expectations for when the BOJ next raises interest rates to next year from something priced in for this year. Not everybody agrees. We've got a Citigroup call on the dollar yen, quite aggressively looking for it to go down, several big figures. The idea that the BOJ will still hike this year and that will be supportive for the yen. Again, they were talking about if the Fed is cutting, even if the BOJ stays on hold, it might boost the yen. But if we can get over some of these awkward politics, which the market is sort of thinking its way through, then maybe there's a possibility that the BOJ will be able to get a hike done, and that would be lifting the yen again. But going to have to watch that political sphere pretty carefully because it's going to be pretty tricky in the next few weeks.
Where politics and central banks collide, I guess. Thank you, Paul Dobson, for joining us with your thoughts on the market. Now let's get your stocks to watch just ahead of the European Equity Open with our Louise Moon. Louise.
Morning, Val. So first up, we're looking at chip stocks today. It's another Oracle story. So Oracle soared overnight. That's after a $300 billion deal on cloud computing, on top of a really aggressive outlook earlier this week. And there was a really great quote by an analyst who was on the call saying there's no better evidence of a seismic shift happening in computing. So tech stocks in the US boosted, played through into Asia, expecting that really to play through into Europe this morning, looking at the usual culprits, ST Micro, Infineon, ASM. So we'll be keeping an eye on them at the open this morning. Next up, we'll be looking at auto stocks. So Mexico has announced it's planning to potentially announce a 50% tariff on autos imported from China. Now, this doesn't directly impact Europe, but there are some European companies that make their cars in China and ship directly to Mexico. So that's the likes of Stellantis and Ford and Volkswagen. So we'll expect to potentially hit at open, keeping a keen eye on those. And then finally, a quick one on Iberdrola. The Spanish utility signed a deal to acquire a 30% stake in a Brazilian power distributor. Stock really doing well so far this year, so potentially boost that one at open.
Thanks very much, Louise. Our equities reporter, Louise Moon. Stocks doing well in China. Not sure all of that translates into anything useful for Europe. Some of that's tech-driven. Some of the commodities going a little higher. China considering helping local governments with some of their debts. That was one of the stories we were breaking this hour. But Europe is set to perhaps wait a little bit, wait for the ECB, wait, importantly, for CPI later today. We'll be back with the open, though, shortly. This is Bloomberg.
Thursday morning, good morning. Quiet morning in Prospect, busy afternoon in Prospect. I think that's probably the narrative. What we saw yesterday, and you can see that quite clearly here, European session rolling off into the end of the day. The S&P gapped higher first thing, unsurprisingly, given what was happening with Oracle, but then did also fade. Europe kind of went out about here. We dropped a little bit since sort of after that with a bit of a bounce towards the end of the session. Therefore, I think kind of the picture at the moment into futures, Val, looks quietish, but kind of warming up, I think would maybe be the tone.
That's right. We're continuing this rally for equities that has been this week, but albeit at a cautious pace. Euro Stoxx 50 futures up 0.2%. The FTSE 100 in the UK up 0.3%. Slight outperformance there. CAC 40 up less than 0.2%. But this market could be jazzed up by the CPI print coming later today. Anna, what stocks are on our radar?
Yes, let's have a look at some of the sectors that we're going to be watching today, Valerie. The tech sector could be in focus again today. Maybe we priced all of this Oracle enthusiasm and excitement into markets yesterday. We didn't see a huge amount of response to it. A bit of positivity around tech yesterday in Europe. Is there more to play for there? We've seen a strong day for some of the tech names over in Asia. Alibaba's in the market raising money. Klarna debuting its IPO over in the United States. So we'll watch that sector once again with perhaps a measured expectation. Homebuilders, though, could be in focus. And this after we saw house prices fall in August. According to the RICS surveyors, there's unexpectedly been a drop in house prices in August. It's a fall in house prices in August, the first time we've seen that since January 2024. So that's certainly going to be something we'll watch in terms of some of those house builders, Barrett Redrow, Bellway, Taylor Wimpey, etc. And we'll also watch autos on tariff news out of Mexico, Guy.
We take house prices fairly seriously in this country. OK, here we go. Time for the session this Thursday. Quiet start, busy afternoon, I suspect, probably in Prospect. Let's show you the opening trade. This is the picture at the moment. FTSE 100, flat as a pancake, waiting for some action to come through there. Yesterday, the IBEX was one of the standout stories with with Inditex rising rapidly. Probably a more quiet session in prospect there, but keep an eye on Iberdrola and what's happening with that story. Stock 600 is now up a little bit, not by much. Again, this kind of narrative, there's a lot coming later on in the session. We digested a lot yesterday, but today we've got CPI coming through, you've got claims numbers you're going to be watching quite carefully a little bit later on as well. There's a few ex-dividends in the market as well. Just be aware of that when you look at what is happening with some of the London trades as well. So the CAC 40 is now up by 0.2%. The London market is up by 0.3%. The IBEX is rallying, but not like yesterday. The DAX is clearly having a quiet day. It's already open, and we are up by 0.1%. Valerie, what's happening in sectors?
It looks fairly positive in the first few minutes of trade when it comes to the sectors picture. We have 17 in the green, only 3 in the red at the moment. Technology, surprisingly, one of the ones in the red. This comes after Oracle's more than 30% surge in the trade yesterday, maybe not lifting stocks, tech stocks, at least in Europe, as much as maybe we thought that they could. At the top of the basket is energy. We also have food and beverage and consumer products. This is all ahead, of course, of the U.S. CPI print coming out later today, which, of course, could jolt equity markets one way or the other, whether it's hot or cold.
Yeah, absolutely. So certainly the CPI print will be in focus here. Food and beverage prices perhaps in focus, as food, beverage and tobacco is the best performing sector this morning. Carlsberg and Tate & Lyle at the top of the pile there. I'm reading Tate & Lyle's ADR's got an outperform from BNP Exane, so we'll certainly watch that. So maybe it's another day where some upgrades and downgrades might cut through as we wait for CPI.
I think tobacco prices weirdly had quite a big impact on the PPI data yesterday. I'm trying to remember. I went through it in terms of the details, but tobacco prices are one of the areas that did stand out. SAP's rolling over again. It's really interesting to see how SAP's reacted to all of this data coming out, this news coming out of Oracle. It's softer. It's one of the biggest weights on the market to the downside. What is interesting is that we've got a big bifurcation within the pharma sector this morning. Novartis and Roche are the 2 biggest points gainers for this market. In fact, the Swiss market's having a relatively good day today. Novartis, Nestle and Roche are the 3 biggest points gainers on the stock 600. Novo is where the weakness is this morning, and that is where the market is lagging a little bit. So that's interesting. But Inditex is up another 2% today.
I'm just looking at the bottom of the performance list, and Basic Resources, the worst performing sector. And I remember days when you used to get positive news out of China around somebody paying off somebody's debts, and that would lift mining names here in London. But that doesn't seem to be the case today. Basic Resources, the worst performing sector, something like Anglo-American down by 0.9%. I suppose M&A is back in the fore in that sector, and maybe that's the biggest story.
Iron ore's rolled over. So iron ore's been a really big theme of late. It's been quite strong. So iron ore numbers are coming softer this morning. We're down by 0.9%. So that's maybe feeding through into that narrative. Remember, iron ore year to date is a little softer. Copper is still up massively. So that's maybe one of the features of that landscape. But
maybe in China they don't buy property anymore, they buy luxury handbags.
Luxury goods. Yeah, we're seeing a decent performance with luxury this morning, carrying one of the biggest stocks on the move, up nearly 3%, 2.7% as I speak. So perhaps a little bit of a Is it or not China changing these kind of markets? Well, let's bring this question to Beata Amanthi, the head of European equity strategy at Citi. Beata, thank you for joining us this morning. Is the European outperformance, the equity outperformance versus the U.S., has that run its course?
Good morning. I don't think it has, but it's the nature of the market is changing, right? So it's not the non-brainer. Well, it was for us at the beginning of the year call to be overweight just the entire index versus the US. It's more about themes than it is about the regions. So we think in the current macro environment, we could see the continuation of the broadening of the markets. Because what is interesting, really, year to date, or actually since the trough in the correction, we've seen very little differentiation when it comes to the regions, but there has been a huge differentiation when it comes to the sector. So we think this is going to continue, and there are some themes running in Europe that still have legs and are not priced in.
Now, will Beata run us through what are those themes that you still think have legs? Is it a sector-specific story in your mind?
So first of all, we need to think what is going to happen to the macro environment. If indeed we are going to have the soft landing underpinned by the cuts from the Fed, we are going to see the dynamics that we've been seeing so far in Europe. So what is interesting, in the US, growth and large caps have been working. The same for the emerging markets. In Europe, it's been year to date, it's been small mid caps over large caps, and cyclicals and value. We think this is going to continue. We still argue that the fiscal story, especially the infrastructure spend, this is our top theme, has not been priced in, and it deserves more upgrades to the EPS from the analysts, and therefore more higher performance and even re-rating, because historically the relationship between valuations and growth tells you higher growth deserves higher valuations.
And Beata, where does that leave the financial sector? I'm thinking about banks in Europe in particular. I was reading a piece by John Authers this morning that was reminding me that this year we've seen the European banking sector trade above book value for the first time since 2010. No small achievement, given what was happening back in 2010, 2011. How keen on the banking sector are you, given what's in store for rates in the US and here in Europe?
So we continue to be overweight banks, and banks is an interesting sector because, of course, it's up over 40% this year. So you could think from price performance it's run its course, but actually it is the sector that is still trading at single-digit PE. And when I look at the earnings revision indices that we run, so the direction of the analyst forecasts, week after week, European banks are getting its EPS upgraded. So this is what is underpinning the rally. And also, well, we've discussed themes. There are many more things we could be thinking about when it comes for Europe. And second order beneficiary, and actually one of the biggest beneficiaries out there for all of these themes is bank sector.
And another sector that I know that stood out to me in your notes, Beata, I think you're underweight on the retail sector. Inditex had a good day yesterday. What are you thinking about when it comes to retail and where you want to position within that?
So actually, we've just overnight upgraded retailing to overweight. We are underweight luxury goods. So we have this pair trade between more affordable consumer versus more expensive consumer. So what is happening with retailing? It is quite encouraging to see actually the earnings profile improving. It's not at the top of the ranks, but it is enough already to get it borderline upgraded to the overweight. So that's what we've done today. Well, overnight.
Beata, what did you make of Oracle going up by 30% yesterday? I'm not on a specific story or a specific equity, but why should I invest in Europe when the AI trade is so strong in the United States and delivering 30% on a stock like Oracle? This isn't a small stock. This isn't a penny stock. This is Oracle.
Of course. I agree with you. This is why we argue you buy cyclicality outside of the US, but you are still buying AI and growth sectors in the US. However, since around July, we've also are more upbeat about the outlook for AI out of Asia, especially China. So we've upgraded China to overweight in our emerging market country allocation. And we argue that actually AI in Asia is cheaper, and the growth, the EPS growth, is even stronger. So everything is broadening. AI theme remains. Yep. Other themes are there, but AI theme is also broadening.
But is the AI trade kind of isolated? It's on its own. It's not related to the real economy. The rest of the stock market is related to the real economy. Are these two different buckets now that don't relate to each other? Because it feels like AI is immune to anything that is related to what is happening in the real economy. And there are plenty of different things happening in the real economy that would make you worry, but you don't worry because the AI trade is immune to all of that.
Of course. So I think we are at the juncture, coming back to the macro environment we discussed at the beginning. So we are between this soft landing underpinned by the Fed cuts, or between further weakness in the economy that could continue and get to the point that investors turn away from this broadening trade into cyclicals, while still buying tech, into moving into the theme of growth is defensive and just coming back to that. That's the risk. But if indeed global economy continues to be resilient, we are not seeing as much effects of tariffs yet. There are signs that they are getting absorbed by the consumer in the US. We are on a good track to continue to see this broadening theme. Now, of course, the valuations are a cap, right? Everything, especially in the US, is expensive. So we need to see the continuation of upgrades to the EPS story. They are still doing well. The upgrades continue, but they are not. We are not seeing these exponential upgrades we've been seeing a year or two ago.
Beata, when it comes to tariffs and the wider trade war, I note that you're underweight the auto sector in Europe. What would give you some hints that perhaps this weakness in European autos has run its course?
So what worries us is that European autos are still paying higher tariffs, right? So the third quarter probably, when we watch these very short-term earnings indicators, like earnings revisions or earnings momentum, perhaps they stopped falling, but there are no signs of minimal improvements yet. This is what I really would like to see to get more upbeat about them.
Beata, thank you very much. Thanks for joining us. Beata Manthe, Head of European Equity Strategy at Citi. Let's have a look at the core six, shall we?
We shall. We'll do it right now. Here we go. These are the numbers that you see on your screen in front of you. There's an awful lot of red out there. Tech is down, defence is down, luxury is down, pharma is mixed, I would say. Novo Nordisk doesn't tell the full story for that sector. And the safer end of the market is over on the right-hand side of your screen. As you can see, Nestlé may have had a bad run of late, but today it is up by 0.5%. Let's figure out what other names we need to be watching. Louise is here with all the details.
Starting off with Covestro, the German-listed companies. There was a report that there might be some remedies to ADNOC's bid to buy Covestro, and this is the stock is soaring as a result, up almost 7% into the green on the back of that report this morning. Next up, we're looking at Playtech, the gaming software maker listed in the UK. They had some results this morning. First half results really boosting the stock, up almost 10%. So investors really happy about that. They're expanding their investment into Brazil in particular, and their numbers came in quite strong, so up almost, over 9% now. Moving on also to Fever-Tree, the posh tonics maker in the UK, also had their results this morning. First half results up over 7%. They say they're seeing good progress, particularly with their partnership in the US with Moores, so things are looking up for them. They're confident of hitting their goals for the year. Moving on to auto, as we've been speaking about this morning, starting with Trainline first, also in the UK, the ticket seller. Shares really soaring into the green, up over 12% this morning. They're saying that their first half of numbers came in strong on the back of a lot of leisure travel, but interesting to see a bit of a lag when they report about the current strikes and the impact that has been having. And finally, finishing on the auto sector that we've been talking about this morning. So potential tariffs from Mexico. Not really weighing on stocks at the moment. I mean, little moves. So Stellantis only slightly up into the green. So we'll have to see how that plays out for the rest of the day.
Yes, I think they wouldn't apply to cars coming from Europe, would they? But certainly the whole auto space being reshaped by the tariff narrative. So we'll certainly keep an eye on that. Louise, thank you. Louise Moon from our breaking news team. Checking in on the housing market next. Coming up, we will have a look at those UK home builders after house prices fell unexpectedly in August. More on that next. This is Bloomberg.
Welcome back. You're watching the opening trade. We are 17 minutes into the session. The DAX is the standout story. It's flat as a pancake right now. A little bit of weakness coming through from the German market. Some of the defence names are softer today, names like Rheinmetall. Elsewhere, there is some strength, not a great deal, but as you can see, we are seeing some strength coming through into the London market.
We are. Let's talk about the London market, shall we? In the shape of UK house builders. UK home builders on the move this morning after a survey showed the most widespread fall in house prices last month since early 2024. Let's speak now to Bloomberg's Sam Unstead. Now, there's nothing like a conversation about house prices to get people animated in London. So we'll do that. Sam, what do you make of the data out from RICS this morning?
Well, I think there's two sides of this. So the house price is part of it. So house prices being seen to fall by the most since early January. A lot of the house price reports we've had out from Nationwide, Halifax, been quite mixed recently. Activity remains quite subdued. And in particular, it's turned into a kind of buyer's market. So that's what's putting that downward pressure on prices. I think the more interesting part of the RICS report today is rents. So rents in the UK already up by 30% over the course of the last 4 years, so a huge increase. That impacts on first-time buyers. That's partly why activity has been quite subdued. And now, so this was driven in part by some legislation changes which tried to sort of push the power back into the hands of renters. Then it was interest rates going up. Most landlords use interest-only mortgages, so the economics become less good. And now we've got a budget coming up, where there's a lot of speculation that rental income will have national insurance added to it as well. And so you've got this extra push that may well result in more landlords leaving the market, more supply coming out, and rents going up even more.
How far through the rates reset story are we in terms of people rolling off 5-year mortgages that they must have taken out during the pandemic when interest rates were super low? That process feels like it's still continuing. Is that something that's just continuing to chip away at the market?
I think that is part of it. So I think what's starting to happen is rates have reached this point, and if you look at the swap rates and then you look also at the average mortgage rates, they've reached this kind of plateau over the course of the last sort of 6 weeks, 2 months or so, and then they've started to edge a little bit higher again in the last few weeks. We actually have seen some of the mortgage lenders raising their rates again in the last few weeks because they also see that rates from the Bank of England are not going to come down, particularly soon. So, I think that's a part of it. And then that's also causing people to think more about refinancing. Can they just stick with what they've got for a little bit longer? The budget causes more uncertainty there as well because you don't know whether there may be some, beyond the rental side of things.
There's also there's talk of change in taxation around housing.
Yes, exactly. Yeah, quite a substantial one, in terms of stamp duty. I think people are still calculating what that may or may not mean for them. So all of these things are kind of keeping the market quite subdued at the moment.
All right, thanks for joining us. That was Bloomberg's Sam Unset on the latest on the UK housing market. Let's turn to an exclusive interview now. UBS's CEO Sergio Ermotti says that consumers will feel the impact of Donald Trump's import tariffs and that it's unclear if there is an inflationary aspect of levies in the U.S. He spoke exclusively to Bloomberg's David Ingles in Hong Kong earlier today.
It's fair to say that also this time probably there is an exaggeration of the estimation, but is going faster than what we saw in the past. But I'm pretty convinced that we are still underestimating the impact it will have over the long term. I think that for us is all about really preparing for the future. The biggest focus we have right now is how to make our processes more efficient on the back end, but also how can we help our client advisors serving their clients in a more effective and efficient way, our analysts to be more responsive to market changes. And, one point is very important. Technology will help humans being better. And in banking, we will continue to see the emotional part, the EQ part of the equation playing also a very important role.
The bank has been around through many cycles. I want to get your sense of this current macro environment. I mean, we went into this year with some expectations around how the macro environment would change, and then we had this flurry of tariffs and this back and forth, and now questions around how much the Fed can, in fact, lower interest rates. What's your sense of the global economy, and where do you think we will be in 6 months' time? Are we going to be better off or worse off?
Well, look, the issue is that I don't think we have seen really the true impact of tariffs playing out in the economies. Of course, when you look at Asia and China in particular, it's fairly robust. 5%, comfortably about 5% GDP is quite a strong momentum. And, of course, also China may be impacted by high tariffs. But on the current assumptions, around 40%, considering also that the weighting of tariffs for exporter has changed. In 2017 was probably around 20% of the exports were going to the U.S. Now we are closer to 14%. Of course, when you look at machinery, autos, and technology, there is between 40 and 80%. But what's going on, for example, in this region, diversification, it's a very important topic. So you see Asian becoming much more, developing more into a diversified play. Same is going on for in Europe. The true issue on tariffs will be seen on consumers. In the US, we will need to see exactly if there is an inflationary aspect of tariffs.
When you speak to your big corporate clients, do you get a sense that people are more conservative still in terms of their assumptions, their capex spending, and just their broad expectations of how things will play out?
Well, I think that there is still a level of uncertainty, although if you look at the world seems to be divided into two, the more traditional, let's call it, economy, and the one that is AI, technology-driven. There is a clear boom and prospect for growth. We see it here in Hong Kong with the booming IPO market. This is something that we saw in the best times.
Right.
But in general, there is a constructive momentum, but the jury's out because the complexity is not only the economics, it's also the very complex geopolitical environment. It's keeping all of us very focused on making sure that we are not becoming complacent.
Right, and there's this renewed, let's put it, a healthy competition coming from some of your Chinese peers in the industry. Do you get a sense that the competition now is a bit more fierce, and how are you prepared to respond to all? How is UBS prepared to respond to this new regime?
Well, I don't remember in my career times in which competition wasn't fierce, look, I think that it's good to see that also Chinese securities firms and banks are broadening up their capabilities. We see us as a complementary player in that sense. So we are helping international investors that wants to invest in China and in Asia, and also the other way around. And this is very complementary with the rest of the industry and the competitive landscape.
The UBS CEO, Sergio Ermotti, of course, speaking exclusively with Bloomberg earlier today whilst in Asia. And Val, I was interested in the comments he was making about two different economies happening right now. In Asia, it seemed, and also in the United States, talking about the traditional economy and then talking about the AI economy. And it does make you wonder, well, firstly, did anybody say that in 1999? I don't know, we'll have to go back and dig our notes up.
You guys might remember.
Well, we might, yes. Yeah, just about harsh, I know. I'm taking the higher ground. So we, that goes through my mind. But then you also wonder how much the structural pickup in that AI story can offset any cyclical negativity.
Yeah, or the fact that maybe you just have AI you vacuuming up all of the investment out there to the expense of the rest of the economy. Is that something we're going to see develop? And in that kind of scenario, how does the Fed set policy? How does any central bank set policy when you've got one industry going crazy and the rest of the economy is being hurt by it?
Is AI also short-term inflationary, long-term deflationary, in as much as short-term demand for...
rush for resources.
Concrete, resources, chips, you name it, are all going to be water. All these things, electricity, are incredibly in high demand at the moment.
Yes.
What effect does that have in terms of the short-term picture too?
Yeah, we talked about that with a rates strategist earlier on this week, didn't we? And that technology has in the past been deflationary, but let's see whether it plays out that way this time around. Coming up on the programme, we check in on markets, of course, as we look ahead to the ECB rate decision, the US CPI print still to come, of course. Ian Steely is going to be joining us, JP Morgan Asset Management. He'll give us his thoughts on the data and the central banking decisions still to come later on today. This is Bloomberg.
Welcome back to the opening trade. We're 30 minutes into today's session. Let's have a check on how these markets are faring. The broad European benchmark, the Euro Stoxx 600, is trading relatively flat, just up less than 0.1%. When it comes to the DAX, we're seeing some underperformance there, down 0.2%. But we are seeing some outperformance today in the FTSE, up nearly 0.5%. There is still risk events on the horizon to deal with, the ECB and the inflation data out of the U.S. later today. Guy?
Looking forward to lunch. Val, let me take you through into some of the internals. We definitely have more up than down. The market, therefore, positive, you could argue. That doesn't take into account weightings, but 324 up, 249 down. Volume seems to be consistently negative at the moment. Now, we've been having a little look into this, and apparently the 100-day captures some of the volatility we saw around tariffs, and as a result of which, where we are now is negative to that. I'm just wondering if we need a slightly different benchmark in terms of assessing where volume is. I think the average volume is about -20, so today we're a little light, but not by much. Maybe things pick up a little bit later on today. Let's take a look at some of the 52-week highs. Fresnillo seems to be a consistent performer. We're up another 2.21%. The gold trade goes from strength to strength, which is odd considering equities go from strength to strength, but we'll park that one for the time being. Banks are actually reasonably well bid today. HSBC is one of the standouts. Going through, as you can see, 1,000, we're up by 0.7%. Banks are bid. We were talking about this a little bit earlier on with Beata Manthian. ISS, this is a janitorial company, let's call it that way, just for cleaning services, etc., for around the world. I'm sure you've seen probably a mop or a bucket with the name ISS on it, but it signed a big deal with the Defence Department, I think, down in Australia. That's given it another leg higher. Stock is up by 4.25% at a 52-week high, Anna.
You can trade all sorts, can't you? Let's talk about some of the other stories that we need to know this morning. And we'll start with trade. Mexico plans to impose tariffs of as much as 50% on cars and other products made by China and several Asian exporters. The move would align the country more closely with the United States. This as President Claudia Sheinbaum prepares for talks over North America's free trade deal. US conservative activist Charlie Kirk has been shot dead at an event in Utah. A search is underway for the killer after a suspect was released by the FBI. President Trump called Charlie a patriot who devoted his life to the cause of open debate. Donald Trump, Joe Biden and Barack Obama have all publicly condemned the killing. And Bloomberg has learned that Poland has asked allies for additional air defence systems and counter-drone technology. This after the NATO member shot down Russian drones that crossed into its territory. The EU has called the event a, quote, serious violation of European airspace and vows to ramp up sanctions against Russia. Val.
Well, let's move on to talk about the ECB. One of the main catalysts for European markets later today will publish its latest interest rate decision at 1:15 London time. Let's get more on what to expect from Bloomberg Lizzie Burden, who is on the ground at the ECB in Frankfurt. Lizzie?
Hey Val, well, I can't tell you much when it comes to what's going to happen on the move itself because an uncontentious hold is what's expected here. Not that exciting because the Governing Council just wants more clarity when it comes to the economic impact of Donald Trump's trade war. And in Christine Lagarde's words, the euro area economy is in a good place. You've got inflation at 2.1%, second quarter GDP revised up, unemployment at a historic low, and all of that quieting the concerns of the doves on the Governing Council. Economists say that they're done with cutting and markets pricing less than a 1 in 3 chance of another cut this year. Now, let's see whether Christine Lagarde hints at whether the next move is a cut or a hike. We look to the forecasts because this is the first set of forecasts since they agreed this trade deal between Brussels and Washington, and 15% tariffs is the midpoint between the base scenario and the severe scenario that the ECB set out. And yes, having a trade deal at all will likely alleviate the uncertainty, but tariffs nonetheless likely to weigh on demand. So you could see the forecast revised up in the short term, but down in the longer term. You could also get some fireworks at the press conference on the question of French politics, because, of course, Christine Lagarde was once the French finance minister. The question being, would the ECB intervene if the oats-bundt spread were to widen? I'm sure that she will say it's not her job to close spreads and it's not her job to comment on individual member states' politics, though they should be fiscally responsible. But it may come up in a conversation about the euro, because, of course, the single currency has managed to shrug off a lot of the French political risk. But it's also a question of when the euro is climbing towards $1.20 because of this expected divergence between the ECB and the Fed may be cutting by a half point next week. That weighs on the deflationary side of the ledger. And you mentioned CPI, Val. One more point here. That number is going to drop right between the decision and the press conference here. So it may be that rather than looking to Frankfurt, the euro looks for its next move out of the US.
Lizzie, great stuff. It's going to be exciting. Looking forward to it. Lizzie Burden at the ECB in Frankfurt. Joining us now to talk about all of this is Ian Steely, International CIO for Fixed Income at JP Morgan Asset Management. Good morning.
Morning.
What's going to move things more today? Is it going to be the CPI number? Is it going to be the ECB? What is the bond market listening to right now?
Or it could be absolutely nothing. That's
definitely.
So, I mean, I think probably I think Lizzie summed it up very well. You've got an ECB and President Lagarde who's going to look for the market to come out as it goes in. Would probably be her base case. CPI is the one that maybe it could do. We obviously saw the weaker PPI print yesterday. I think we now know that maybe a little bit of surprise to the upside is probably not going to do very much for pricing. If it weakens a bit, the 50 basis points, does that come onto the table? Does seem a bit of a long shot at the moment, but again, I think that's probably the direction the market is going for. And if you get a weaker number, it basically opens the door to at least have those discussions, albeit just for a couple of days.
Can I take a step back? Are bonds a better investment than equities at the moment?
I think on a risk-adjusted basis, definitely. I think you're still in an environment, though, where actually generally I think risk probably does pretty well, because I think economies they're sub-trend, maybe they're slowing a little bit, but reasonably fine. And you've now got the largest central bank in the world who looks like they're going to be easing policy over the next few meetings. That should be good for all risk assets, bonds, equities. I think it's a good environment for asset price growth.
Ian, at least when it comes to the fixed income world, the wildly popular trade has been to be in steepeners, to be short the back end, long the front end. Do you see a risk that trade gets massively stopped out? And are we already starting to see signals of it? That 10-year auction in the U.S. was taken down decently with demand. We have the 30-year today. Perhaps people use that as a liquidity event to close out these positions. What's your thought on the steepening trades?
I still think over longer term you want to be in the steepening trade. And I think we also need to go back and look over history. We're still not at particularly high levels from a steepening standpoint versus where we've been during typical rate cutting cycles. It's just we've all been lulled into this sort of false sense of security of the zero interest rate policy and the inverted yield curve. So I think taking a step back, actually, it doesn't look too abnormal. We could see periods of indigestion in that, given that everyone does like it and a lot of people are in it. I do think we sort of bounced off 5% on the long bond. People obviously see that as an attractive entry point. I think more importantly to me is we are seeing generally yields coming down across the curve in the US because actually the Fed is credibly looking to cut rates. They're not doing it based on pressure on the political standpoint at the moment. We are seeing a weakening in the labour market. It does feel like rates can come down. To get a really big steepening in the curve, you're either going to need to see proper deterioration in the jobs market and a concern about recession. The 2-year is then going to move a lot lower than it is at the moment. Or we get concerns that actually they're cutting too much. They shouldn't be doing that, and then that's going to be a case of a long bond to move higher. But I think at the moment the market is acting reasonably based on the information it has.
How aggressive do you think the Fed could shift to become? Are you considering a 50 basis point move, or is it just telegraphing a steady stream of 25 basis points cuts until they get below neutral?
I think the latter is the more likely, the 25 basis points. I do wonder if we get a weak CPI print today, whether the market kind of romances the idea of the 50 basis points. I think everyone's looking at what happened last year. There seems to be
exactly a year ago.
Exactly a year ago, there was a very timely news article that came out during the Fed blackout period that indicated that's maybe what they wanted to do. We've not heard anything. It does feel like we're running out of time. 25 basis points over the next few meetings would make a lot more sense to me.
I do like this idea of to romance an idea in financial markets as a verb. I think that's lovely, Ian. I'm going to start referencing that. So where's the bar for CPI to change the market's thinking today, do you think?
I think...
Or is it not possible, actually, because of everything that's been said about jobs?
Yeah, no, I think on the high side, so 0.3 is expected. If we're going to be hitting 0.4, I don't think that really makes a huge difference. Even a 0.5, I'm not sure, because we've heard from Powell over the last few weeks, at Jackson Hole in particular, they see inflation as transitory in this case. We're coming back to that word again, but they see it as a bit of a hump, and ultimately it should be a one-off hike that comes back down again. I think actually the bar would be if we have a lower print, and we're sort of 0.2 is maybe a low 0.2. Again, it doesn't seem realistic based on what we know. But if that's the case, and again, it's that idea of, does the Fed really need to do a lot more than currently being priced?
Yeah, I mean, bond markets don't like inflation. When you're looking out for this nemesis, Ian, what do you think in terms of that transitory conversation? Because some say, yes, it'll just be a one-time, very mechanical increase in prices, and actually that might be over a long period because of the way companies have been stocking up before the tariffs came in. But others say, actually, this will trigger all kinds of secondary inflation impacts. Do you think that story could still be revived in 2026?
I think I look at a couple of things. So definitely looking at long-term inflation expectations, they're remaining reasonably well anchored. So the market perception at the moment is more of that one-time boost that comes back down again. The other thing that I think a lot of people are focusing on, and they're remembering 2022 and the fact that inflation wasn't transitory. We are in such a different environment compared to where we were then. If you remember that, we had effectively employers couldn't get the employment they needed. They were basically jacking up wages to try to get the staff coming out of COVID. People had excess savings. That's not the case. And I think importantly, what we're really focusing on at the moment to make sure that that long-term inflation expectation is anchored is wages. And at the moment in the US, wages are still trending down. Now, if we started to see them tick back up again and start to show that there was maybe a lack of supply of labour and people were having to raise wages up, that might be more of a concern. But we're not seeing that come through at the moment.
The idea that we're going to see rate cuts based on labour market weakness. Now, normally that would be really straightforward. Labour market weakens, you want to cut rates because the labour market can accelerate, all of that good stuff that we've known in the past. Do we understand the current labour market? Do we understand what is happening with deportations? Do we understand what's happening with the generational shift? This feels like a really odd labour market to be making big decisions on. I'm just wondering kind of if everybody's got their arms around some of the kind of the obvious odd things that are happening at the moment.
I think that's a fair comment. I think it's evident that the level that keeps the labour market static is probably less than what we've previously known or believed it to be. The question is, if you look at the moment, 29,000 on average over the last 3 months or so, that's low. We could be having negative prints over the next couple of months. Who knows? I mean, that is an environment the Fed don't want. And we're not in a position where the Fed's got rates at 2 or 3%. They're at 4.25 to 4.5. They have the flexibility to do these sort of maintenance cuts, as they describe it, just to make sure that this doesn't snowball and have a bigger impact. And I think that's where they are at the moment. That does, all the labour data that we look at does show it slowing, though. Right. So,
but not very quickly. Like if you look at the wage number, if you look at the unemployment number, it's slowing, but it's not.
No, it's not falling off a cliff. No, but it can do, and that's what the Fed want to make sure doesn't happen. And when you've got rates above what they believe to be their long-run neutral, they have the flexibility to do that.
OK, Ian, thank you very much. Thanks for joining us. Good to speak to you this morning. Ian Steely, International CIO of Fixed Income at JP Morgan Asset Management. Perfect person to preview the CPI print later on today and, of course, look ahead to the ECB. Coming up, we'll get back to some of the geopolitical conversations of the week. We'll speak to Livia Paggi, Managing Director for Strategy and Risk Advisory at JS Held on geopolitical risk after Russian drones were shot down in Polish airspace. That's next. This is Bloomberg.
Welcome back to the opening trade. 46 minutes into the session. The DAX is underperforming. The FTSE 100 is outperforming. That's the picture we have at the moment. We're waiting for the big news, which is expected to come later in the form of the CPI print out of the United States. Claims looks reasonably stable in terms of what we're expecting from economists there. The ECB... yeah, you're going to want to watch that. Of course you're going to want to watch that. Christine Lagarde on deck a little bit later on. Geopolitics is also having an impact as well on these markets. Poland has reportedly asked allies for additional air defence systems and counter-drone technology to better protect its land from Russian incursions. The request came after the NATO member shot down drones that crossed into its territory. For more now, we're joined by Bloomberg's Oliver Crook. In terms of how this unfolded, Ollie, how much do we know about the cooperation between NATO members as a result of the incursions we've seen over the last few days?
There was a great deal of cooperation between NATO members. We understand that this involved, a sort of operation that sprawled a lot of different kit and hardware, a lot of different nations. The Poles with their F-16s. We understand it involved Dutch F-35s as well as German Patriot defense systems. There were also Italian intelligence craft that were also part of this operation to bring down a number of drones. The number of air violations we were told by Donald Tusk was 19 yesterday over Poland, and a number of those going down in various places across Poland, and some of them as far as more than 250 kilometers from the Ukrainian borders into Poland. So of course this has prompted an extreme response from the Poles, who we had Donald Tusk speaking a little bit earlier in front of a number of F-16s, saying taking sort of how seriously they were taking it, illustrating that by calling on Article 4 of the NATO treaty, which is to call of consultations among NATO allies to figure out how to respond. We've had the Poles also asking, getting requests from other allies to get more air defense sent to Poland, and we understand that that's been, met with acquiescence. We have a number of nations that are apparently sending that kit over right now, and the Russians, for their part, have stayed relatively silent in terms of what this actually was. There was some sort of commentary about it from Russian military officials kind of early on. That sort of disappeared. Then we heard from the Kremlin spokesperson, who basically refused to give any kind of comment on what this actually meant, what it was, who it was designed for. But for the NATO alliance, they're going to be watching this very closely in terms of what their response is going to be. Donald Trump, for his part, has said very little about this. He sort of acknowledged that it happened yesterday. Of course, the news flow in the United States probably has taken control, but it will be interesting to see if there are these consultations called among NATO allies, whether Trump will be involved, and how this will fit into the Trump calculus with how to deal with Russia.
Oliver, thank you very much. Bloomberg's Oliver Kirk joining us there from Berlin. Joining us now to discuss this further, Livia Paggi, who is Managing Director of Strategy and Risk Advisory at JS Health. Livia, can you shed any light, and maybe we will never know exactly, on what was intended yesterday by Russia? What was the purpose of those drones coming into Polish airspace? Do we have a sense of that yet?
Well, we don't have a clear sense simply because the Russians have not accepted or commented on exactly what was happening. But what I think we can say is that it fits broadly with Russia's modus operandi of testing NATO, testing the NATO alliance, testing whether Trump is serious about looking for a peace deal, and really testing the unity of the West in terms of supporting Ukraine. So although it doesn't constitute necessarily as a full-on attack on a NATO country, it could be certainly interpreted as a provocation.
Livia, you're just mentioning there that this was just a threat to test the NATO alliance, to test the NATO unity. What do you make then of the White House's response to this?
I mean, the White House, they've immediately said that they would increase tariffs. They'll go after Russia. But the reality is that we saw that we had this big meeting in Alaska to discuss peace negotiations. There was huge coverage of it. We got Putin meeting Trump. But the reality is that not yet, we have not seen any clear, concrete steps coming out of that meeting, which makes us realize that fundamentally we are probably not near a resolution to this conflict.
Livia, if this was a test, did Europe pass? Did NATO pass? What will Vladimir Putin have made of the results of this test?
I mean, certainly what's interesting is already on the Polish side, they were very alarmed. Obviously, Poland has, as well as the other Baltic countries, are much more concerned as they are on the eastern flank. Directly on the front line dealing with Russia. And obviously their rhetoric was much more alarming, immediately triggered Article 4, which calls for consultations and to discuss what's actually happening and what the strategy is going forward, whereas you saw Rutte, the head of NATO, was trying to be much more measured and not overly alarmist and trying to de-escalate. And I think what that shows Putin is that NATO and Europe are very wary of escalating the situation and are not necessarily ready to send in boots on the ground in Ukraine to defend Ukraine. And we've seen statements in the past on Germany that they're not willing to do so. But there is actually a division among European states on what level of intervention are they willing to make to defend Ukraine?
We were talking earlier about the reaction from the White House, Livia. How do you think Russia will perceive the fact that we haven't heard very much from President Trump himself about this? Clearly, our colleague Oliver pointing out, the news agenda in the United States moved on pretty quickly and other things perhaps seemed more pressing in the moment. But what would it mean if we don't see very much comment from President Trump on this?
I think Putin is going to interpreting as what he already knows about Trump, which is that Trump does look for resolutions, but is extremely volatile, ranches up rhetoric, then brings it down, and is ultimately someone who Putin can control in the sense that there's an unpredictability with him, and that's exactly been Putin's strategy all along, is to take advantage when the U.S. is distracted, to take advantage when Trump is distracted, and ultimately take advantage of the domestic instability in the U.S. as well.
Olivia, we just had a headline crossing the terminal that Ryanair, the airline company, is saying that Europe needs a strong response to Russia's prodding. What do you think that, at least when it comes to businesses, what do they want to see out of this coming out of Europe's response?
I mean, I think European businesses, in addition to obviously the Ukrainian people and the domestic situation in Ukraine, I think European businesses are the ones that have suffered the most from this conflict. I mean, we've seen it from energy companies, we've seen it for inflation of oil and gas prices, businesses. We've advised numerous clients and investors who have had assets seized in Russia, who are struggling enormously to navigate sanctions because their supply chains are directly or indirectly controlled. So I think fundamentally European businesses are desperate to see a resolution to this conflict and continue to do business as usual.
All right, that was Livia Paggi, Managing Director of Strategy and Risk Advisory at JS Held, joining us on that latest political development in Poland. But let's take a look at the risk events on the horizon as we close out this hour of programming. At 1:15, we have the ECB rate decision. Right smack in between that, we have the 1:30 data drop out of the U.S. that includes CPI and initial jobless claims. 15 minutes later is the ECB press conference. And then later this evening, we have the big Treasury bond auction, $22 billion of 30-year duration into the market.
I thought it was interesting. Ian Steely saying even if we got 0.5%, and the expectation is 0.3, isn't it, on core CPI, even if we got 0.5, he didn't think that would really reset the markets thinking about rate cuts, because we focused so much on the labour market, and Powell has.
Yeah, maybe not so much on the expectation of September cut. I think that's definitely nailed in. But you have to start to think that would cause maybe some issues when it comes to their communication of a pivot next week, right? They maybe not want to hint to the market that they're in for an aggressive pace of cuts if they get a very hot CPI print today.
Does the equity market want 50 or 25? That's the question. And will today's number open the door to 50? Potentially. People are talking about 75 now, but that's definitely out there. That's definitely not on the list. But you do wonder, does a weak number today kind of continue that debate into the meeting? And as that pricing changes a little bit, maybe at the margin, maybe it becomes a little bit more of a reality. Maybe that's, in theory, good for equities. I don't know.
Maybe.
Slowing economy
what does AI want?
Sounds great.
What does AI want?
What does AI want?
We can ask. We'll ask it later. Maybe they take a leaf. Maybe the Fed next week take a leaf out of the ECB book and tries to be deliberately, uninformative, which is what the ECB has been saying.
That would be a hard thing for them to do because they released their SEP, their Summary of Economic Projection, which includes the dot plot. We've already had this dovish shift at Jackson Hole, so it's going to be hard for them to prevent fireworks.
That is informative, whether they want it to be or not. Right, we must give you some timings. ECB rate decision 1:15 UK time, of course, followed by President Lagarde's news conference half an hour later. That is it for the opening trade. The Pulse is up next. This is Bloomberg.